Good afternoon. Getting right down to business here. We're doing it live and doing more at 4 weekday afternoons right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. And be sure to stay tuned tonight at 6 for Winning with WINANS. Top-ranked money manager Ken WINANS will be back on the air this evening with me, Ken WINANS at WINANSinvestments.com. Well, stocks did close slightly higher today and hitting record highs for both the NASDAQ and the S&P 500. Good enough for record highs to kick off the new week. The Dow, though, did pull back, so we did see a mixed finish here. Stocks did eke out records today as the U.S. and European Union, the EU, announced a trade deal. This, of course, kicking off another action-packed week, one big week after another. More big tech earnings this week, a Fed meeting, inflation report coming out, and the big enchilada of monthly economic reports, and that is the jobs report we get every month from the Labor Department. They'll be coming out on Friday. And also this week, President Trump's August 1st deadline to lock in more trade deals. The Dow coming in for a closing loss today of 64 points at 44,838. The Dow's been late to the record party lately. The S&P 500 continuing its winning streak, up another point, good enough for an all-time high at 6,390. And the NASDAQ popped 70 points at 21,179. That's another record high for that index. The yield on the 10-year note at 4.42%. Gold moving higher at 40 cents to $3,310.80 an ounce. Bitcoin hovering just below 118,000. We'll take a closer look at all that coming up. President Trump announcing the U.S. deal on tariffs and trade with the EU today, including the EU deal to buy $750 billion of American energy products over the next 3 years. Also, U.S. and Chinese trade negotiators are meeting this week for at least a couple of days of trade talks. And we'll be talking more about that. President Trump hopes the third gathering of the trade teams in recent months will provide a chance to pivot to longer-term issues, even as a short-term deadline of August 12th remains in place regarding the Chinese. Talks, of course, being closely watched for whether they will move the countries toward a face-to-face later this year between President Trump and the Chinese leader. We will take a closer look at all of that coming up later this hour. Chinese state media now confirming today the talks were underway at the Rosenbad building in Stockholm without providing additional details. We'll try to get some more information about that. The talks coming during another critical week for the president's trade agenda. And we'll be discussing this with China expert Gordon Chang, distinguished senior fellow at Gatestone Institute, author of numerous books on China, including his latest, Plan Red, China's Project to Destroy America, also active on X at Gordon G. Chang. President Trump visited the Fed on Friday to tour its $2.5 billion renovation project. The president criticized the project as too expensive, sparking speculation he might use it as a pretext to fire Chairman Powell. But the president indicated last week he was not considering firing the Fed chair. This as the Fed is getting set to meet for 2 days, the policy-setting meeting that'll culminate with a statement on the economy, a decision on short-term interest rates, and a full-blown news conference by Fed Chairman Jerome Powell. I'll discuss all that later this hour with veteran business journalist Mark Hamrick, Bankrate senior economic analyst and Washington bureau chief at Bankrate. But first, on your money, the markets, the economy, the Fed meeting this week, crypto and the whole works now. Joining us live, top-ranked money manager Ken WINANS, President and Chief Investment Officer at WINANS Investments at WINANSinvestments.com. Ken WINANS, also a market historian, author of numerous books. He's got his crypto credentials, too, also a Forbes magazine contributor. Most importantly, he's host of Winning with WINANS, heard every Monday evening at 6 p.m. right here on your favorite station, 790 KBC. Good afternoon to you, Ken WINANS.
Frank, you and I have been texting all weekend, especially when the Christmas came early with that deal that we made with the Europeans. Boy, oh boy, was that big news. But hey, I want to tell you something very quickly. You just talked about that renovation at the Federal Reserve. For anybody who's been to Washington, D.C. lately, and I mean, I've been going there every year, part of the Vegas Chamber of Commerce, and there are construction cranes still all over the place. But this is something that everybody who's a taxpayer in this country should ask yourself. The brand new Las Vegas A's ballpark, brand new, is going to cost all in $2 billion. Now, can somebody explain to me how a federal building that's been existing since, the 1930s could possibly cost that much in a renovation? I'll tell you. I mean, out here we laugh at these kind of things. But let's get back to the stock market, Frank Mottek. This is a really surprising statistic that came out today. 40% of the S&P 500 has posted their earnings. Over 70% of those companies have either exceeded or matched their earnings or their revenue growth, and 60% of those companies have beaten both top and bottom line growth. You know, like the old Wendy's commercial, where's the beef? I bring it up with, I mean, all these naysayers that it's almost downright depressing to talk to certain people. And I just tell them, look, it's like the old Wendy's commercial. Where's the beef? Where's all this destruction from the tariffs? It's not showing up in the corporate earnings of U.S. global companies. It's simply not there.
Clara Peller, of course, the actress in that famous Wendy's commercial, just had a flashback to her image. And, of course, Vice President Mondale used that back in the day when he had that debate with President Reagan. And so where's the beef making a comeback here? In the meantime, we see the S&P 500 and the Dow the S&P 500, the NASDAQ at all-time highs. And one of the write-ups we had a chance to text about was the Barron's article. S&P 500 could see its best run of gains since the 1990s, and a lot of bullish enthusiasm here, Ken Winans. So let's note the fact that we're at record highs for the tech names, and a critical week here for the earnings on some of the biggest names in the tech world, and the S&P 500 has been on a sizzling winning streak. The Dow has been the caboose in all of this. What's your reaction to this record-shattering performance we've seen in the last couple of weeks?
Well, let me get back real quick. Let me start with the Dow first. You know, they keep monkeying around with this thing. They keep adding and taking companies off. I mean, I'll always jokingly say when I ask anybody who's part of that, you know, the Dow committee, why do you have two credit card companies in an industrial average? You know, it's always the same thing. Look, these things became ETFs. Once that happened, they stopped being market benchmarks. And I look at a broader array of statistics to look at what's going on with the market. Frank, this is what we have going on right now. It is a game of you're either it or you're not. And there are companies that truly have troubles. I mean, you can take almost any industry. I can even find it in tech. I mean, look at Apple, a prime example of a company that is truly missing the mark, at least when you just look at what's going on with its stock. So every industry has its dogs. But the one thing that we're going to have to just kind of grow comfortable with, and you have to, and I hate to say it, but it is very partisan. If you are a believer in this administration's policies, and clearly after what just came out, you know, with the EU trade deal, the UK trade deal, talk with China, I actually, you know, I think that the EU situation is going to really open the flood.
Nightly Scroll with Haley Carania.
Hello to all my homies in the chat. I'm Haley Carania with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Carania.
I love this place.
Follow and listen on your favorite platform.
Gates, because I think Canada especially is going to have to look at what Europe just agreed to, and they are part and very closely tied, obviously, to the British Commonwealth. They're going to have to really take a good hard look. I think Mexico is as well, because it has been said many, many times by this administration, those that come to the table get better deals than those who wait. And I think that we're going to find more and more of these deals are going to basically going to be closed, and it's going to really solidify things. But with that, I'm always amazed that, and actually today I had a little bit of let's say a heated discussion with somebody who happens to be, you know, they were somebody who was born in Europe. And I just say, look, I don't know what part of America came in 2 world wars and helped rebuild you after World War II, and you think you have a right to fleece us. I don't know what part of that is lost on people. But a lot of us, as me included, as a veteran and somebody who's 12th generation American, I'm sick of it. And then we're finally turning the tables. And so everybody's getting a fair deal. Nobody's getting everything they want. I know Bloomberg had a whole big article written about who's going to lose in this EU trade deal. And clearly, if you're an alternative power, you're not going to win in this deal. But Frank, here's the thing. Going back to earnings and revenues, it's telling you all you need to know. Our American companies are so adept at pivoting and adjusting to things, and they're doing it right now. And I can't be prouder to see what's going on with this economy at large.
Fantastic. And we've, of course, been reminded a lot of times that the stock market is forward-looking. Looks like the market is expecting good things, and pretty much a week doesn't get any bigger than this with a Fed meeting, the huge earnings reports coming out for the big tech names this week, an inflation report, and then the big enchilada, as I mentioned, the jobs report. It'll be coming out on Friday, and then Friday's already August 1st, by the way, the deadline to lock in more trade deals. So it's going to be a pretty thick week for news. And what do you think the Fed is going to do here, Ken Winans, on the interest rate front, getting a lot of pressure from President Trump to lower interest rates at this point?
I don't think the Fed's going to do anything until the fall, personally. Number one, they still have real concerns. And you know, look, it's their opinion that the tariffs could potentially have some inflationary issues. But as I brought up on many, many times, Frank, I watch 19 physical commodities every day. And one of the things that I've seen, and I'm talking about wheat, corn, cocoa, coffee, all the things that some of us use every day. The reality of it is we have a normal seasonal pattern in commodities. If you were going to have inflation really take off like it did in the 1970s, we had commodities really take off. So there was a legendary story about soybeans going up 1,000% in 18 months. We don't have any of that right now. Now, clearly, there's gold, silver, copper. You can find a lot of, cattle. They're in multi-year bull markets. But what I'm trying to say is you don't have that across the board. So, again, anybody who's in the inflation camp, I'm just saying if it is inflation, it's very different than what we've had before. But the Federal Reserve is very concerned about tariffs, and I think they're going to stay pat. I would just say this, too, real quick. The markets do have a seasonality about them. And really from this month through September, the old adage, you either have to want to sell the rallies or buy the dips. I believe this is still a bullish trend, and you should lean toward buying the dips, not selling this rally. But again, as I said, I'm really astounded how the markets have become very political, and there's still a lot of people out there who just think that this whole thing's about ready to fall apart. I think there's a big difference between the beginning of a bear market and a correction and an overall bull trend. And I'm as surprised as everybody else at the resilience this market has had. Frank, one other thing, I've said it a couple of times. If you have stocks in your portfolio that are below their 200-day moving average, they're acting terrible by this point in time. And some of these, some people will say, well, these things they're undervalued, they're cheap. I'll tell you what, this is not the kind of market to play the value thing. I would suggest getting rid of those stocks because people are going to sell them going into the end of the year for tax losses. I just don't think you want to be a holder of those kind of things.
All right, let's get to some more of the exciting stuff. Just a couple of weeks after what was called Crypto Week and that genius bill being signed into law by President Trump, and now a couple other bills that'll be taken up again soon on the crypto front. We've seen Bitcoin flirt around its all-time high, which came up during Crypto Week there, above 123,000. Right now, just below 118. What's your reaction to the latest price action on the cryptos here?
People are buying the dips, Frank. They're whether, and you know what, I think of all of them, Ethereum especially, which is the mother of dead cat bounces, is still holding very strong. Here's the thing, and a lot of people are very late coming to the party with crypto. You're in one of those interim phases where it's getting ready to go more mainstream. I've just told folks, look, what I would do, no one's expecting you to try to figure out how to open up a Coinbase wallet or anything else. Just follow the crypto stocks. My favorite is Coinbase, but now you can certainly follow Circle. You can follow Robinhood. There's a lot of them you can follow that have very, very close ties to crypto, and I would suggest go there. But I do think whether you like it or not, believe it or not, you do need to be aware of its trends. And largely financial services, and I'm talking about the banks, the insurance companies, credit card companies, anything in fintech, any of this stuff is going to benefit from crypto regulation in a deregulated environment. So again, you need to at least be aware of it, even if you don't want to get involved.
All right, and of course we have the NASDAQ at a record high again today, and You have mentioned this apparent correlation between the tech names and crypto. Are you still seeing that, or is there some divergence
Absolutely.
here? Okay.
No, absolutely. But Frank, here's the thing: it's not in lockstep. Let's just say it's kissing cousins. It basically quarterly has a very strong correlation, but I can clearly find times month to month, especially with what happened to Ethereum, where it really does begin to deviate. But if you're looking at it quarter to quarter to quarter, and especially if you look at it as a technician, when I look at the NASDAQ above its 200-day moving average and accelerating, same with Bitcoin, they're all of them. When they are trending up and they're all doing it at the same time, you really want to be careful not to try to call a top and sell it off. Now, one other quick thing, and this is very, very important, that, we are, especially for people who have Bitcoin ETFs or Bitcoin mutual funds, just keep in mind, there's been a lot of trading going on, and you might have some unpleasant tax surprises when you get into the fall. So if you have any of these special, Bitcoin or, any crypto related investment products, you're going to want to talk to your advisor or your accountant to find out, do you potentially have a headache showing up in the fall, which is when they begin to distribute those capital gains to their shareholders. So just an FYI, as we all know, it's been a very volatile year, and people do need to start thinking ahead on taxes, because you can be victorious on finishing out the year, but because of actions you took earlier in the year on whether you sold stuff, you bought it at a certain time, you hedged, there can be some short-term capital gains issues that can affect you, and especially if you live in California.
All right, no conversation would be complete without bringing up AI these days. So NVIDIA appears to be at a record high here, up more than $3 today at 176 and change. What do you see ahead for NVIDIA?
Well, here's the thing. NVIDIA has, in a lot of weird ways, we talk about the Mag 7. I loved it when you brought it up last week, Frank, that the Mag 7 changed their places and we actually add and subtract them. I mean, here's the thing. NVIDIA is a celebrity stock. It is what stocks like Apple used to be or Google used to be. They changed their places within that celebrity. My only concern about it is you begin to get concerned about what the CEO is doing, or what are they doing outside of just making a good chip and making money. Personally, I would lean towards some of the other AI-related names that are not in the headlines, and many people might not even know of them. Now, for me personally, one of my big positions is Broadcom. That's my big AI position. It performs well, and it's not quite as volatile as NVIDIA. So that's just my choice. But also remember, NVIDIA is a big chunk now of a lot of the stock market indices, so it has a lot of weight. One final point, just as it was with Apple, you get to the point where everybody owns it. And that's what we call a very crowded trade. So if you're going to try to add it to your portfolio now, because the volatility scared you away in April, you need to begin to talk to yourself or ask yourself, why am I buying the highs and selling the lows? And NVIDIA is one of those highly volatile, high beta stocks where you really got to be an experienced investor or trader to do it properly.
Terrific. Ken Winans, President and Chief Investment Officer at Winans Investments at winansinvestments.com. Look forward to continuing the conversation at 6 o'clock this evening on Winning with Winans right here in 790 KABC. Ken, thank you very much for taking the call here this afternoon.
My pleasure, Frank. Talk to you soon.
Thank
Bye.
you very much. Out to the freeways we go now on 790 KABC. 790 KABC welcomes Gypsy Kings featuring Nicholas Reyes, coming to the City National Grove of Anaheim August 13th. Tickets on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller number 9 right now. Call now, 1-888-795-2222. Tickets furnished by Nederlander Concerts. Mixed finish for the stock market, but good enough for record highs for both the S&P 500 and for the NASDAQ. The NASDAQ up another 70 points, settling at 21,179. The S&P 500 up a point, good enough for a record high close at 6,390 as that index continues to shatter records after a 5-day winning streak last week. The Dow pulling back, though, down 64 at 44,838. Gold right now hovering at 3,310 and change. Silver at 38.33. And platinum at $1,424.50 an ounce. Oil just below $67 a barrel. Checking the cryptos now, we see a Bitcoin just below 118K, Ethereum at 3,785, and Doge at the moment at 23 cents. The Magnificent One continues to amaze at more than $3 today at 176 and change. Apple up 17 cents at 214. And we'll have more coming up here in just a moment. But right now, the latest news for you here on 790 KBC. Mottek On Money continues here, 790 KBC. Big week. Fed will be starting a 2-day policy setting meeting, deciding whether to lower interest rates, as President Trump has clearly expressed that's what he wants. We'll be getting a full-blown news conference from Fed Chairman Jerome Powell when that wraps up on Wednesday. In the meantime, President Trump did ease market nerves last week by downplaying talk of firing the Fed Chairman Jerome Powell. The president did visit the Fed's headquarters last week to tour the $2.5 billion renovation project, which President Trump said was actually more like $3 billion. The president indicated he was not considering firing the Fed chair at that meeting. Let's bring in an expert here on all of this, and that is someone who covers the Fed very, very closely, veteran business journalist Mark HAMRICK, Bankrate Senior Economic Analyst and Washington Bureau Chief at Bankrate.com. Mark, great to have you with us here. Good afternoon to you, sir.
Always a pleasure, Frank. Thanks for having me.
Wonderful. Give us your reaction and your report on what happened last week, first of all.
Well, I mean, given how often is a Federal Reserve chairman involved in a photo opportunity that ends up generating cringeworthy memes? Of course, memes are a phenomenon of our modern era, but I for one was surprised that Powell showed up, but I was I guess pleasantly surprised in that way, because I think that it showed leadership on his part. Essentially, for reasons that maybe only the president understands, he sought to do a tour of this Federal Reserve complex that now includes a total of 3 buildings, and we're talking about century-old structures being the oldest one. And if he's not complaining about the level of interest rates, the president's complaining about the renovation that has been very costly. I mean, I think we'd all love to have $2.5 billion to renovate something, but that's the benefit of being the nation's central bank. So if anything, it seemed to clear the air in a sense of the president indicating that he doesn't see this as something that might provide the groundwork for firing for cause, which most legal eagles tell us would be the only situation in which a Federal Reserve chairman could be removed, and this wouldn't qualify per se.
Presidential visit to the Fed headquarters is a rare event, right? You may have covered previous occasions like that?
I believe the last time it happened was about 30 years ago. Can't remember which president at the moment, but yeah, I mean, if anything, it's the chair who goes to the White House, and that's a relatively rare occasion, because there is this concept that has been, time tested, and I think has served the nation and the institutions well, and that is that the Fed is to be politically independent, but does report to Congress through semi-annual testimony, and obviously members of Congress can ask them for information at any time. But sort of being at the beck and call of a presidential administration is not the way that this central bank was set up. And Fed chairs going back for as long as I can remember have made the point that politically independent central banks make decisions that end up being proven historically better than those which are not. That's not to say they are perfect. I think they admit that they are far from it. But if essentially the president has his button on the interest rate lever, then all of a sudden, he has political motives to do that, and not the same motives that the central bank. What are the motives of the central bank? It has essentially, first of all, a dual mandate to strive for stable prices and maximum employment. In other words, low inflation and a strong job market. And it has sort of a secondary call to action, which is to work to ensure financial stability in markets and in the financial system.
Going into that dramatic meeting last week, and it's clear that the president has been publicly saying that he's not a fan, to put it politely, of the Fed chairman, and is firing the Fed chair, you think, off the table at this point following that meeting last week?
Well, I mean, I don't want to try to predict what this president would do or say, but I think that it's been the understanding for quite some time now that that is not a path that a president can legally take, except for perhaps the exception that we mentioned earlier. And the Supreme Court even, I think, did something that was quite extraordinary in essentially ruling in favor of giving the president the power or affirming his decision to remove members of a commission in the federal government, said, but the Federal Reserve is not like this. And so it was as if, or quite evidently, obviously, that the Supreme Court, that it was necessary for them to say that, don't touch that rail.
Very interesting. And you've had interactions with the Fed chair in the past, and certainly everything he says could potentially rattle the markets. We're at record highs here for the NASDAQ and the S&P 500. So that was not the case last week following that dramatic interaction we saw.
No, it wasn't. And, I don't think that it's we talked about the mandates or essentially the missions of the central bank. It's certainly not the mission of our central bank to tell us where stock prices might be. I know you...
Nightly Scroll with Haley Caronia.
Hello to all my homies in the chat. I'm Haley Caronia with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Caronia.
I love this place.
Follow and listen on your favorite platform.
And I have both been around long enough, Frank, that we can remember many years ago when Alan Greenspan made an off-the-cuff remark to Maria Bartiromo, of all people, at what was, I believe, the White House Correspondents' Dinner, where he made a comment that essentially the stock market might be overvalued. And that somehow, I think, as I recall, she essentially called it in, and the stock futures took a tumble. And of course, I believe it was in an actual speech before Congress where he used the phrase "irrational exuberance," which was a phrase coined by a Nobel Prize-winning economist. So, Powell has not sort of talked about valuations in the stock market very often. He might touch on that this week. It would be interesting, but they're not seeking to knock down the stock market. Far from it.
You're going to be there this week for his news conference, and what do you think is going to happen this week?
Well, I mean, obviously markets are pricing in the notion that the Fed stays on hold this time around, and I wrote a piece on LinkedIn today that talks about another potentially historic aspect of this, and that is that we'll be watching to see how many members of the voting Federal Open Market Committee essentially vote against the statement that we presume will say that rates should stay on hold or are staying on hold at this meeting. And you know what? I think that is a healthy thing, if indeed that's the way it works out, because there was a question that I posed to the chairman in May of 2024, the spring of 2024 at any rate, where I asked him about the fact that there have been relatively few dissents under his term. And as a chairman, I believe that it's really been his goal to strive for consensus. In other words, sort of go into the meeting to say, where do we find agreement as a group, obviously to sound out a variety of opinions. And he addressed that issue very, I think, well and succinctly in his reply to say, actually, we actually do have a variety of opinions that are expressed, and just because people aren't voting against the statement doesn't mean that we don't have different opinions. And we have Michelle Bowman, who's the vice chair for financial supervision, a fellow native Kansan like myself, who came from the banking industry in Kansas. We have Christopher Waller, another Midwesterner who had been essentially the chief economist for the Federal Reserve Bank of St. Louis. Those are the ones that are seen as potentially voting against the statement to hold rates steady. And oh, by the way, they're also seen as potential successors to Jerome Powell because his term does end in May of next year, and both of them were nominated by President Trump.
All right, and it looks like that'll be the it. That'll be it for Fed Chairman Jerome Powell. It's unlikely President Trump will reappoint him based on what we saw last week and what we've been hearing. Yeah. So maybe we can get you back on after that big news conference later this week, Mark. And so thank you very much for that comprehensive report and update on what's happening there at the Federal Reserve. And I want to hear more about that renovation, too, at some point. So you've been through that building, and love to hear more about that in our next conversation. So thank you very much for taking the call here this afternoon.
Always my great pleasure, Frank. Thanks for having me.
Thank you very much. That is Mark HAMRICK, Bankrate, Senior Economic Analyst, Washington Bureau Chief, veteran business journalist, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. Big week this week. President Trump says the deal on tariffs and trade with the EU includes the deal to buy $750 billion of U.S. energy products over the next 3 years. Meanwhile, U.S. and Chinese trade negotiators are reported to be meeting this week for at least 2 days of trade talks on that important trade front. President Trump and his team hopes the third gathering of the trade team in recent months will provide a chance to pivot to longer-term issues, even though a short-term deadline of August 12th remains at the forefront. And talks being closely watched. Maybe a face-to-face meeting will happen this year between President Trump and the Chinese leader. That's under consideration. Also, the Chinese state media confirming today the talks were underway in Stockholm without providing additional details between U.S. and Chinese negotiators. All this coming during another critical week for the president's trade agenda. Looks like major trading partners, including Canada and South Korea, are still in talks. Meanwhile, to stop shooting, Thailand and Cambodia have agreed to an immediate ceasefire. Let's bring in now China expert Gordon Chang, distinguished senior fellow at Gatestone, author of numerous books on China, including his latest, Plan Red, China's Project to Destroy America, also active on X at Gordon G. Chang. Gordon Chang, thank you very much for taking the call on all of this here this afternoon.
Well, thank you so much, Frank.
First of all, it's been a while since we've chatted behind live microphones. It looks like the headline today, Thailand and Cambodia have agreed to an immediate ceasefire after a deadly exchange of artillery fire along their border. What's your reaction to that big news recently?
Well, President Trump intervened. He called both sides and threatened higher tariffs if they didn't stop it. And that's a good thing. Now, people in the region thought that this was a proxy war with China on Cambodia's side and the United States on Thailand's side. But I don't think that really is the case. And it's good that President Trump stopped it so that at least they can talk. This is a long-running dispute. These two countries have been arguing over this particular temple for quite some time. They're not going to solve it now, but at least they're not killing each other.
Thailand and Cambodia agreeing to an immediate and unconditional ceasefire after 5 days of fighting at their border, killed at least 33 people and displaced tens of thousands. The BBC is reporting that. We'll continue to follow that story closely. Turning now to the trade front with this reported meeting between the U.S. And Chinese negotiators happening in Sweden at the moment. Give us an update on how this trade discussion is playing out.
Well, today, the first day of the talks ended after about 5 hours. Neither side talked to the press afterwards. They will meet tomorrow. Most people expect that the 90-day pause, which expires on the 12th of next month, will be extended for another 90 days. Normally, an extension benefits China because it gives it more time to engage in predatory trade practices and to steal U.S. intellectual property. This time, however, I think delay helps the United States. And the reason is that President Trump is stitching up these trade deals with everybody else, and they're shutting out China, especially that deal announced on Sunday with the European Union. These were very favorable terms for the United States. I don't think China's feeling very good at this moment.
On there live with China expert Gordon Chang. And so we got these deadlines coming up. Are these pretty firm, or might there be more flexibility? Of course, as we've seen in the past, people get nervous when we got these deadlines coming up.
Yeah, this deadline, most people think will be extended, and we'll just have to see. I mean, they were pretty stony-faced today, which is an indication that the discussions were tough. The Trump administration wants China to open up. Americans have been wanting that for decades. And really what Trump is asking Xi Jinping is to no longer act like a communist.
That's probably unlikely. So we're going to see some sort of deal, probably patterned on the Phase 1 trade deal of January 2020, which basically the Chinese agreed to buy certain amounts of American manufactured goods and commodities. The Chinese dishonored it. The U.S. did not enforce it. So this is not a good precedent, but it's basically the only thing that could work in these circumstances.
All right. So Treasury Secretary Bessent, part of this negotiating team in Sweden at the Swedish Prime Minister's office in Stockholm. That's certainly a big deal, and possibly setting the stage for a epic meeting between President Trump and the Chinese leader. You think that's going to happen?
Well, President Trump wants it to happen, so it probably will. I mean, fortunately, it's not going to happen on September 3rd. The Chinese invited Trump to that big World War II celebration day. If Trump went, that would have been a debacle, because that would be just a glorification of China's memes. One of them is that it was great to kill Americans during the Korean War. So no American president should, or no American full stop, should go to that. They're talking now about maybe going to China in connection with the APEC summit. Who knows how this is going to work out? But right now, I think that it's best not to go to China, because the Chinese are going to use that for propaganda purposes to show the world and the Chinese people that the American president believes he's in an inferior position to China. I'm sure Trump doesn't think that, but that's the way the Chinese view it, and that's the way the Chinese propaganda is going to show it around the world.
On your live with Gordon G. Chang, and you've been following the Chinese effort to buy up farmland here in the U.S. And another interesting story that's been getting attention on one of the major networks, China's climate lawfare should come under the microscope of the U.S. Attorney General, with the Kansas Attorney General alleging that the Chinese government is bankrolling environmental lawsuits here in the U.S. What do we need to know about that?
Well, this has been going on for quite some time, Frank, where the Chinese have been trying to get the U.S. to get away from LNG and oil, basically cheap American energy, and to buy Chinese solar panels and wind turbines. This is not really good for the United States, and we should not be permitting the funding of anybody by Communist Party United Front Work Department units, as we have in this particular case. One can say they should be green energy, but making ourselves dependent, even more dependent on China, is a really wrong move at this moment, especially because a lot of China's green products are made with forced or slave labor, and they shouldn't come into the U.S. under the Tariff Act of 1930 in any case.
Are the Chinese buying more farmland under this administration?
Well, they're continuing to buy farmland, and they own more than is generally reported, because a lot of Chinese purchasers do not comply with U.S. Department of Commerce reporting requirements or U.S. Department of Agriculture reporting requirements. So this is a bigger problem than we think. And we can see the Chinese are engaged in some pretty dubious activities, especially the concern that they are using land to plant invasive species in our country. So until we get to the bottom of that, we don't have proof, but there's a lot of evidence suggesting that. Until we get to the bottom of this, I don't think the Chinese should be owning any farm or ranch land in the United States.
China expert Gordon Chang, distinguished senior fellow at Gatestone Institute, author of numerous books on China. His latest, Plan Red, China's Project to Destroy America, on X at Gordon G. Chang. Gordon Chang, thank you very much for joining us live here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz, and then at 6, Winning with Winans here on 790 KBC.
Mic Drop, hosted by former Navy SEAL Mike Ridlin. It's raw.
Any single time that you left the wire, you could lose 4 guys.
It's unfiltered.
That was the most horrible screaming I'd ever heard. Taking a hit on the chin, you want to pay it back?
It's tough talk from the top minds in their field.
Would I choose to not do our duty as military fighting men? No, I would not make that decision, without question.
Mic Drop. Follow and listen on your favorite platform.